all of my recommendations, you will see a published SSL. SSL is an acronym for Suggested Stop Loss. Using a stop loss when investing in the stock market is a prudent way to preserve capital. In the case of my SSLs, these are just the suggested level at which you might want to consider selling your shares and taking a loss to prevent further erosion of capital. SSLs are very important if you view your investment as more of a trade than a long-term hold. In this case, preservation of capital is very important if you want to live to trade another day. My SSLs are based on technical support levels. I like to go back and look at prices where the stock had support previously. The idea being, if those previous support levels give away, lower prices are likely to come next. The SSLs I select don't necessarily have to match a level you might choose. You might prefer to use a different method to determine the risk you are willing to take. For example, William O'Neill of Investors Business Daily has always used 7% as a standardized stop loss. If you want to adhere to that kind of discipline, you need to buy stocks right. I think 7% is pretty tight for many microcaps, as these stocks can be quite volatile and you might cheat yourself out of some big upside by using too tight a stop. There's no rule that requires you to use SSLs to make money in the market. They are just exactly what I call them, suggested stop losses. It is simply a suggested level you might consider using. Here's one discipline I believe should be a rule. There will be times when you decide to go ahead and hold a stock below either my SSL or your own stop loss. Should you decide to do so, then you need to recognize the investment has just evolved from a trade to a long-term hold. With a long-term hold, you don't really care where the stock trades in the short term. In long-term situations, you're looking for unfavorable market conditions to accumulate positions at lower prices. In my view, long-term is defined as stocks you are willing to hold more than a year to take advantage of the favorable long-term capital gains rates. Over the years, I have found short-term trades tend to become long-term investments for one of two reasons. Sometimes a stock will catch my eye and I'll take a position as a trade. As the company delivers positive developments and I become more comfortable, I might evolve the stock up to a long-term position. The other way trades become long-term holds is in tough market conditions. Sometimes stocks fall dramatically in sympathy with the overall market, despite strong performance from the company. In this case, sometimes my trades become long-term holds. I make the determination when the stocks trade down to my SSL. In either case, always define your strategy going in, understand any change in strategy, and have it clearly defined. Use the SSLs if you choose to do so, but recognize that if you don't, you've become a long-term investor.